Welcome to MarketTamer.com. We're going to address a question before we look at this chart on McDonald's. And the question we received was, what has been the impact of government intervention on interest rate policy? And maybe we can more broadly include the Federal Reserve, given that Federal Reserve Chairman and the board set the interest rates. So in the past, we saw that those rates were artificially kept low. And maybe the question is best answered by saying, what would the interest rate have been had there been no intervention, or if rates had not been kept artificially low through the Greenspan era, towards the end of it at least? And the answer to that is that the market would have kept rates higher, would have rewarded savers. Obviously, with higher interest rates, it would attract more savers. And with higher interest rates, it would be less attractive to borrow. And so we would have seen a dual benefit there, which would have incentivized saving and would also have penalized those looking to borrow heavily. So the impact really of artificially low rates is to do the opposite. It is to incentivize borrowing, and it is to penalize savings. And as a result, we find ourselves in a situation where leverage increases continuously, and ultimately when things start to go south, as we've seen, the damage can be much greater. Now let's move on to McDonald's here. We've seen that McDonald's has, since some news came out a few days ago, has actually dropped lower. And it's not necessarily important to discuss the same-store sales figures right now. Just be aware that there was a news event. It did cause the stock to drop. And the question then is how to take advantage of that. Well, we're coming up towards earnings in about a month's time or so here. Another earnings season. Of course, we know there are 4 throughout the year. January, April, July, and October typically are considered earnings seasons. And when stocks drop based on news, or indeed when they rise based on news events, we often see that it's difficult for the stock to, in the case of it dropping, it's difficult for it to rise back up above that level where it was before the news event. And in some cases, when it's rising up based on a news event, it often finds it difficult to retrace lower than that unless some other news event comes out. But if we're looking just at the meandering pattern of the stock chart, it's typically the case that it is visible resistance and visible support. That is, it is hard for the stock to break above or break below those levels that have been set following the news events. And as a result, we can take advantage of that. And one way of taking advantage of that is with a bearish credit spread if the stock has fallen down, for example, in this case on McDonald's. Another way of taking advantage of it is with a bullish credit spread. And obviously what we're referring to are credit spreads such as bear calls and bull puts. There is a lot more to those trades than simply placing them subsequent to a news event. And certainly we are happy to go into more detail on those issues in classes. But for now, just keep that in mind. Maybe put it as a post-it note over the next 3 weeks. Stick it on the computer there. And what you'll find is as earnings comes out and the stocks you're keeping an eye on start to make moves, maybe those bullish and bearish credit spreads will be very appropriate. Finally, a stock we'll look at here today is Research in Motion. Where it's at right now is actually a key Fibonacci level. And so we're watching this pretty carefully today. If we can stick above it, there's a good chance the stock can actually rally another $10, $12 higher to the next level. Obviously, if it fails this level today, right around the 84, 85 area, then we could see a correction. Certainly the trend has been bullish. It remains bullish. So we're not seeing any real reason for it to correct at this point in time. But just be aware, if you're looking at Research in Motion, this is a key area. And so we tend to prefer to see the stock confirm one way or the other before taking action. All right, with that, we'll wish you a wonderful day and look forward to seeing you in classes. Take good care. Bye-bye.